Okay, for this last video in this four-part series, we're going to look at the actual K-1 for a partner and then the K-3 that gets attached to the Schedule K-1. Okay, so if we go back to the table of contents here, we've already gone through the first three videos. And like I said, the last one is to cover Schedule K-3 and the Schedule K-1 for each partner. Now, just a reminder, as to the structure here, we have a Cayman Islands entity that's a disregarded entity. All the income and expense is passing up to this U.S. LLC, a Delaware LLC taxed as a partnership, and then the income is being allocated 50% to each owner. Jane Doe is the one who's K1 and K3 we're going to look at. She's a Bermuda citizen and a Bermuda resident, and so she is not subject to any U.S. taxes on her allocation of the income because this entity is not engaged in U.S. trade or business. It has no ECI and it has no other types of U.S. source income. So U.S. source FDAP income, interest, dividends, and the like. Okay, so if we go back to the K1, this is the K1 for Jane, so we can see the fake holdco information up here. It's an initial K1. We've got Jane's name and address down here. She lives in Bermuda, Hamilton City. Foreign U.S. is the placeholder for her tax ID number because she doesn't have an ITIN or a social security number. Now, on questions G and H1, we've indicated here that she's a limited or LLC member rather, and a foreign partner, right? So very important, right? We are indicating that she's a foreign partner, not a domestic one. And so obviously that drives the reporting changes, right? If she were a foreign partner and we had U.S. source income, maybe we would have some U.S. withholding tax obligations, but in this case we don't. And then at the bottom here in Schedule L, we can see the reconciliation, right? She contributed $100,000 in capital. The amount of allocable net income or loss to her is $48,715, and there's her ending capital account. Now, here are the important things to note before we get into the K2, or sorry, the K3. On the face of it, Jane can see she has line 1, ordinary income or loss allocated to her, $48,699, and then interest income of $16. Just based on looking at this, if we didn't have the Schedule K2s and K3s, Jane has no idea the source of these amounts, right? And the reason why they've added the K2 and K3s is try to provide more clarity, not just for the IRS, but for the owners, the partners in these companies, what their allocation of earnings are based on source and how are taxes computed accordingly. So this is where we jump into the K3 for Jane. So if we look at Jane's K3, the start of it is the summary schedule, very similar to the summary that we saw for K2, where it's just a bunch of check boxes, yes or no, what's going to be attached. So nothing too much to cover here. But if we jump into the meat of this, so Part 1, the foreign tax credit limitation issues, this is where we start to see kind of the numbers come to light. Now this section provides the gross income and gross expense information based on source, right? And so this is generally supposed to be used for U.S. taxpayers, so that's individuals completing a Form 1116 or corporations completing an 1118, and they're trying to figure out their FTC limitations, right? Now Jane, because she's a non-resident, a lot of this information is probably going to be a moot point for her. But, you know, if she were a resident in a country where it was important for her to know the type of income, whether it's U.S. source or foreign and by country, it could be quite helpful. So nevertheless, we've prepared her for her because, again, we're trying to provide the most complete tax return as possible for all of the partners. And so this is the information that Jane's presented with. You recall in the K2, gross income or gross sales is your gross receipts net of returns and allowances and the cost of goods sold. So the allocation of gross profit, so that $322,300, that allocation being sent over to Jane is 1/2 because she's a 50% partner. So she gets $161,150 of the total amount reported on K2. And very similar reporting to the interest, right? So remember, the interest income, foreign source, from the Cayman bank account is $32. You split that two ways. You got 50% to each partner. So 50% is being allocated to Jane, right? And remember, foreign source, passive category income. There's nothing that's U.S. sourced within this company. Nothing, right? All of the activities are being conducted outside of the United States. All the bank accounts are out there that are earning interest. There's no U.S. situs assets that are generating U.S. effectively connected income. So the rest of this gross income section is left blank, right? Because we don't have any dividends or royalties, no 1231 gains, something like that. So that's all blank. Now, when we get down to part 2, section 1 at the bottom, this is the totals for all those amounts. So for us, pretty straightforward, right? We only had one line item in each category. So the total gross income here being allocated to Jane, $161,166. Second page is where we get to the expenses, right? So here are the deductions. The expenses allocated to the sales income, again, that's 1/2 of the total that's being allocated to Jane, and that falls within foreign source category, or column B for the category foreign branch income. And then we get to the bottom here, we have the net amount. So there's the total deductions, the net income or loss. Foreign branch category income, $48,699, $16 of interest. And then the total income allocation, or the net allocation rather, is $48,715. Now keep these numbers in mind, right? $48,699. That is, if we jump up really quickly here, keep it in memory, the ordinary income or loss allocated to Jane. So remember, page 1 of that 1065, reporting all the ordinary income or loss allocated to the partners. Now all of it, given the facts of this fact pattern here, is foreign branch category income. So all of this line 1, none of this is U.S. source income. None of this is ECI connected with the U.S. trade or business. None of this is ECI that's foreign, that's connected with the U.S. trade or business. It is all foreign branch category income. And on line 5, the total amount of interest is all Cayman Islands source income. Right? That's very, very important. So, again, if we jump down here to the summary page, right, the passive category income in total, net income or loss, 16 is all foreign passive category, and then foreign branch category is that net amount on line 1. Okay? Now, remember, part 10 is the other one that we're completing. So, part 9, blank, we have no 59 Cap A issues. Similar kind of allocations in what we had above with the foreign tax credit limitations, right? So we've got our ordinary business income allocation, the interest. Remember, these are in totals. And then as we move from left to right, we're categorizing it based on where it should be allocated, right? So none of this is partner determination income. So we don't have any sales of stocks or bonds or other types of personal property. We have ECI, non-ECI. There is no U.S. or foreign source ECI, hence these columns are blank. We do have foreign source, non-ECI, right? Ordinary income and interest, so those two amounts are allocated there. And then similar reporting with the expenses, right? We've got our foreign source expenses there allocated to non-ECI. And so what that means is, you know, if Jane is reading this and she sees, well, I don't have any ECI, U.S. or foreign source, then I don't have any tax obligations under section 1446, the withholding piece. So the partnership is not withholding any tax. The non-ECI portion, Jane should pay a little closer attention to, because if you have allocations of U.S. source FDAP income or U.S. source other income, because it is U.S. source, there might still be some withholding taxes, but it's not effectively connected income. So I've got some other videos that cover that topic. I'll put the link to those below as well. Go check those out. But in this example here for Jane, pretty straightforward, right? Everything is just foreign source. So Jane doesn't have any U.S. withholding tax obligations that were taken off the top of the partnership level. And she doesn't have to file a return either. All right, so very, very good news for her, right? The lower amount of taxes, the better. And then when we get down to Part 10, Section 3, we can see the allocations to Jane for these. Basically, they're the interest expense limitations that would otherwise apply to corporate partners, right? So that's her allocation of the worldwide gross income. Again, no U.S. ECI. Her allocation of the assets. And then the personnel amount, this actually doesn't get allocated per partner. You just report the totals on a per company basis. So worldwide personnel for the LLC is 3, and then the U.S. trade or business personnel for the LLC is 0. All right, so that covers it for this tutorial. I hope this was helpful. Provided some high level yet unique or some substantive and detailed information as to how to get through these K2 and K3s. Again, I do have other videos that I've posted and will be posting covering these schedules in more detail, but I think this example highlights some very common kind of structures we see now where we have U.S. entities, but we have no U.S. direct tax exposure when we have foreign investors in those funds. So hope that was helpful. Again, if you have any questions or comments, leave me a note below. I try to answer as many of these as I can. And I look forward to seeing you again on the next video. All right, thank you and take care.